Let's now shift focus to commodities and figure out what's happening over there. Manisha, it was all about the central bank feel-good factor yesterday. How is it looking this morning?
Oh, well, yes, and we did see a lot of knee-jerk reaction come in for the prices. It was a relief rally that we saw in many of those commodities. But today it seems like a day where there is some sustainability, even a bit of a profit-taking, because after the Bank of Switzerland actually cut rates, we have seen the US dollar index gain, and that has led to prices cooling off a bit. So and then apart from that, it also has been slight profit-taking because the prices had run up quite strongly. But there is a lot of support still in metals because of the strong Chinese data that we have seen in last couple of weeks that has come in. So whether it has been about fixed income, retail, production, manufacturing, all of their data came in better than the street expectation. Also, the US Fed rate cuts going forward is supportive as a sentiment, and there has been stockist and mills buying metals on the lower levels. That has been supportive as well. I'll talk about nickel first, and we were trading at a one-month lows, but we have seen prices gain up slightly. So this one is trading at around $17,000 a ton in Asian markets right now. Good gains, and even with the bit of a profit taking that we have seen in Asia, most of the metals are trading on the higher side of the range. So you have aluminum prices still trading at around 11-week highs. Remember, China has been importing big numbers of unwrought aluminum imports, and we have seen 93% of gain in the month of Jan and Feb on an year-on-year basis onto this one. Not just aluminum, lead LME stocks also stand at an 11-year highs. We have seen the ferrous metals actually gain up slightly. So iron ore prices, which were trading at a 9-month lows of around 102 a ton, have surged beyond $108 a ton. Steel prices, which were holding at around 4-year lows, also have seen some buying. So when you talk about this week, we are looking at 3 to 4% of gains coming in for both the ferrous metals. Copper as well continues to hold around those 11-month highs. There's a very strong statement from Trafigura, which is the largest commodity trader in the world, saying that they are very bullish in copper because of the underinvestments, and by 2030 they're anticipating a deficit of around 5 to 6 million tons when it comes to copper. A very interesting development also that you would want to know is that until now, when you look at metals globally, you look at LME and New York and the Chinese markets. Now LME is planning to list Jeddah at the Saudi port for copper and zinc delivery points. Well, we have been looking at Saudi Arabia, where they want to move away from energy and include minerals, mining, logistics into their portfolio. So we do understand that with the subject to proposal consultation, in the next 3 months, you could be looking at Jeddah and Saudi Arabia as well, as far as the metal prices go. The last chart comes in and brings to you on what we have seen in sense of prices on a weekly and a monthly basis. So copper prices have seen a bit of a decline after that all-time highs that we saw in China. On a monthly basis, still in the positive. But the best of reaction in this week clearly has come in from the ferrous metals, 2.5% and a 4.5% of gains coming in for iron ore and steel. So absolute opportunity and strong buying that we've seen from the lower levels.
All right. Thanks a lot, Manisha, for that. Let's